To watch the full lecture of all subjects, kindly subscribe to my YouTube channel and press the bell icon because whenever I post the new videos, you will get the immediate notifications. Hello everyone, welcome to my YouTube channel. In my part 1 video, I had discussed about the meaning, definition and who is an auditor. In this particular part, we'll be discussing a very important topic, that is the objectives of auditing. It is an expected question and a very important topic, so please pay attention. Now, the objectives of audit can be divided into two broad objectives. The first one is primary objectives and second one is secondary objective. Again, the primary objective is classified into two types. One is promoting efficiency, second one is promoting accuracy. In secondary objectives, we are having four broad classifications. The first one is disclosure of errors, second one is disclosure of frauds, third one is avoidance of errors, fourth one is avoidance of frauds. Now, when disclosure of errors can be again divided into clerical error, compensating error, and error of principle. Disclosure of frauds can be classified into misuse of cash, exploitation of goods, and manipulation of accounts. Next, when we come to the clerical errors, this particular clerical errors, it can be again classified into error of omission and error of commission. Let us see all these objectives of audit in detail with an examples. First one is the primary objective. The primary objective is also called as main objectives. It is also known as main objective. So the primary objective of the auditor is to express an appropriate opinion as to whether the financial statements present fairly in all matter respects the financial position, the results of operation, and the cash flow of business. Now, let me take up a slide to explain this primary objective. Now, in an organization, you will be preparing certain financial statements. We will be preparing certain financial statements. The financial statements, as I have told, it may include balance sheet, P&L account, and the other statements, cash flow statements, everything we are maintaining. Now, a person is required to check whether whatever the financial statements we have made, whether it is correct or not correct. The process of telling correct or not correct means he need to give an opinion. What opinion he need to give? Whether the financial statement is correct or not correct. In order to give the opinion, we need to verify the books of accounts. Who will do the verification of books of accounts? It is auditor. The auditor is a person who will verify the books of accounts and give an opinion whether the financial statements maintained by the organization is correct or not correct. That is what they have told. To express an appropriate opinion whether the financial statements is presenting a fair information or true information to the public. Next, to verify how far the accounting system is successful in correctly recording transaction, checking whether the accounts are prepared according to the recognized accounting policies and practices and as per the statutory requirements. We have something called as US GAAP, then International Financial Reporting Standards. So these are all the accounting policies, accounting standards are being provided by these particular framework. So an auditor has to check whether the main objective of him is to check whether the company is maintaining appropriate books of accounts by following appropriate procedure. Hope you understood about the primary objective. Let us come to secondary objectives. An auditor may come across some errors and frauds. What is the difference between error and fraud? In my future slides, I'll explain. While examining the books of accounts. Now, when the books of accounts is being examined by the auditor, he may find something called as frauds and errors. Okay, what happens in order to verify accurately, he need to give a correct judgment. So he need to deduct, and prevention of fraud and errors is a secondary object. First thing is he need to deduct this frauds and errors, then he need to prevent, means avoid these frauds and errors. So he will provide certain guidelines to the organization to provide these frauds and errors. This is a secondary objectives. Now, the secondary objectives of accounting is again classified into two types. First one is detection and prevention of errors, and second one is detection and prevention of frauds. What is errors? Errors are mistakes, and it is performed unintentionally or unknowingly, we can say. Means there was no intention to do any mistakes, but without your notice or without your knowledge, you have performed certain mistakes unintentionally. That is known as errors, and this may happen due to carelessness or ignorance, etc. So identifying the errors and preventing these errors is one of the secondary objective of auditing. Next is the types of errors. Again, in this errors, we have four different types: clerical error, compensating error, error of principle, error of duplication. Let us see what each error says. First one is clerical error, which is arising due to wrong posting. For example, now you would have done a sales of rupees 1 lakh rupees, but instead of recording it into sales ledger, okay, you need to record this into sales ledger, you will record it into purchase ledger. It will be recorded into purchase ledger. This is known as wrong posting. So such types of errors are known as clerical errors, and this happens with due ignorance. Means without your notice, without your knowledge, carelessness, it happens. If these errors are discovered in the process of audit, the auditor should get rectified. Auditor, while he is auditing the books of accounts, he will find out that an accountant has by mistakenly entered the transaction in purchase ledger, which has to be in sales ledger. Then he need to correct that. So all that should be deducted and corrected by the auditor. This is clerical error. Then again, the clerical errors are again divided into two types. One is the errors of omission and the errors of commission. Errors of omission means the transaction is completely omitted. So transaction is not found, we can say. In simple words, the transaction is not found, or you have not entered. Transactions not entered. So either wholly or partially you might have not recorded in the books of accounts. So I'll give an example for wholly and partially. Now see here, this is wholly and partially how it happens. What happens? The customer purchases some products from you, which is a sales from you. You will not at all enter that in your books of accounts. This is wholly, what you say, omission, means you're omitted. The whole transactions is not recorded in the books of accounts. Partially means what happens, the consumer or the customer pays 15,000 on Jan 1st and on Jan 10th he pays 15,000. You will enter this Jan 1st transaction, but you will not enter this Jan 10th transaction. Partial omission. This is known as partial omission. Means the partial items you are not recorded in the books of accounts. So this is known as error of omission. But this will not affect the trial balance. In trial balance, what happens if it is not recorded? Then no, it will not affect anyhow. And in this 15,000, if you have not entered that you have received, then this will be in the debtor's side. It will be shown as a debtors in the trial balance, so it will not affect the trial balance, and it is very much difficult to find out. In this case, what happens, the customer is happy that he has cleared the amount, but company has not received, so it is very difficult to know that whether the customer has paid or not. So it is very difficult to find out the error of omission. Example, furniture purchased for cash 3,000 and not recorded in the books of accounts. Same example. Next is error of commission. Error of commission means it's wrong posting to ledger account, or what you say, the wrong totaling. For example, here there is a example. If you see here, what happens, there is a cash sales of 10,000, but what happens, while entering in keyboard you will only plus 3 zeros and you miss out 1 zero. So instead of 10,000 you have entered 1,000, means there is a difference of 9,000 you have missed out. So this is wrong posting to ledger accounts. Wrongly you have entered the amount, the wrong totaling happens. So what happens, this affects your total balances. So your total balance actually now in trial balance the value of sales must be 10,000, but instead of 10,000 the value of sales will be recorded, that is 1,000. This is known as error of commission. Now next, compensating error. What is compensation? Means you have done a mistake and you compensate. That is compensating. But here in this case of accounting, an error is encountered with another error. Means in order to match or correct one error, you are making one more error. These errors will not disturb the agreement of trial balance. For example, Geeta's account, which was to be debited for rupees 6,000, was credited for rupees 6,000. So what happens, there's a Geeta account, okay, she should have been debited, but she has been credited. Means wrong entry you have done. Similarly, Sita's account, which was to be credited rupees 6,000, was debited to for rupees 6,000. So similarly, there's a Sita, okay, she should have been actually credited. Here she should have been debited, but here she should have been credited for same amount 6,000. Here what happens, instead of crediting you will do a debit. So anyway, at end of the day you have one debit for 6,000 and one credit of 6,000. It will not affect any trial balance. This but it is very difficult to find even such type of errors. This is compensating errors. Next come error of principle. Principle means if you have not following, see, in accounting you have accounting standards, accounting rules, and accounting conventions. Three things are there. If you miss out any one, okay, if you miss out any one, that is known as error of principle. For example, furniture purchased for rupees 5,000 debited to purchase account. This is an error of principle. Only those things which you purchase for selling, for the purpose of selling, should be actually put into purchase account. Furniture will be purchased for business, should be not come under purchase account, okay, because that you are using for office purpose. So this is an error of principle. So such type of error is also known as errors of principle. Now, error of duplication means double posting. The same transaction you will post it in 2 times in a day. For example, you are selling some goods to Mr. John. You have entered this transaction wrongly twice. So what happens? The sales ledger shows double balance. For example, you have done a sales of 10,000, you have recorded. Again, you forget and you record it again 10,000. What happens? The sales balance become 20,000. It should have been 10,000, but it is double. This is known as error of duplication. Next is location of errors means where can the auditor find out these errors? Auditors are appointed to audit the books. No, this is books. Not to identify the errors, but in many cases they are called out to find out the differences in books of accounts. Sometimes the balance sheet will not get tallied. Sometimes the trial balance will not show correct results. To correct all these things, the auditor may be called sometimes. So the auditor must follow certain procedures. The first one, what you need to do, you need to check the trial balance. After checking the trial balance, he should compare the list of debit and credit with the trial balance. We know that trial balance will be like this. This column will be particulars. Here it will be debit and credit. You need to check each of the accounts. Okay. Then this in trial balance, what will be there? The balances of ledger accounts will be there. Then the auditor should check individual ledgers. So he should compare the names of account appearing in the ledger and whether he need to check that whether the ledger balance and the trial balance shows the same. After checking that, he need to check the totals of all the ledgers and make sure that the same totals have been entered in the trial balance. Okay. Then he can identify some errors or frauds by checking detailedly. This is known as location of errors. Next is detection and prevention of frauds. Till now we saw about errors. What is fraud? Fraud means intentional mistakes or purposefully you do. Knowing that it is a mistake you perform, then that is known as fraud. Fraud refers to the intentional and deliberate misrepresentation of accounting records for financial gain, for your own benefit, for the benefit of the shareholder, the owner of the company, for your own benefit. What happens? They will purposefully shows more profit, they purposefully show less profit, they purposefully mismatch some books of accounts. The purposefully, if you perform any mistakes, such mistakes are known as frauds. There are three types of frauds. One is embezzlement or misappropriation of cash. Second one is misappropriation of goods. Third one is manipulation of accounts. Now, embezzlement or misappropriation of cash means, for example, there are 6 blocks on my screen. Let us discuss about each of the 6 blocks. The first one is omission of receipt regarding to the payment receipts of cash vouchers. You would have received some cash from the customers. What happens? You don't show it in the cash book. You simply take the cash and you don't entry. That is the first error, fraud. The second fraud is misutilization of cash by without showing the cash book. What happens? A customer pays you 2000 rupees. Instead of recording the 2000 rupees in the cash book, you take it to your home and enjoy it. This is also a fraud. The third one is this types of frauds may be done by the employee or the cashier. What happens? The cashier is a person who collects the cash. He may not show in the entry. He may take the cash to his home. So there's a chances of employees and cashiers doing such errors. This method is known as steaming and lading or lapping. So what is steaming and lading means? It is a method of committing fraud by employee or cashier of the business firm. The frauds done by employee or cashier is known as teaming and lading. Okay. Then what happened is the teaming and landing may be adapted in which money received from one customer is pocketed, means they put in their own pockets, and later on what happens, if another customer will receive the money, they will show that that is the money received from the first customer. For example, a customer will pay you 5,000, you will take it in your own pockets. B customer will again come and pay 5,000. You will show this 5,000 is paid by A customer. Like that you manage some more. These are all known as embezzlement and misappropriation of cash. Next is misappropriation of goods. What happens in a godowns? There'll be heavy goods you'll be using. Some goods you will take to your home for your personal use. Okay. Then you will tell to the auditor or any concerned person telling that someone has stolen the goods. So such things happens. Then you issue false credit notes. Credit notes is sales returns. You wouldn't have done any sales, or simply you will show that the customer has returned the goods. So all this things are misappropriation of goods. Next one is fraudulent manipulation of accounts. Usually this kind of frauds are done by the upper level management. Okay. Usually the top level management like management, board of directors. Okay. Those people. This is the main intention is to mislead certain parties. Now what happens? Certain parties here are the banks or the creditors, the shareholders, debenture holders, these things. This is known as window dressing. So what happened? The main objective here is to evade tax. What happens when you show less money or less profit? You may have to pay less tax and you may have to pay the less dividends to the shareholders. That only if you show more profit, then you need to pay more income tax, then you need to even pay more dividends. So hiding profits of the company and manipulating the books of accounts is a kind of fraud. Now, behind this manipulation, there are two motives. One is showing lower profits than actual ones. Second one is showing more profits. Now, showing lower profits. What happens? By chance there is a company and which is doing a heavy profit, you think, and B company is a competitor of A company. What happens when B company gets to know that A company is doing very good profit? Then B company will make certain strategies. So B company will become a huge competition. So to create a wrong impression in B company that A company is not making any profit, what happens? A company shows in his balance sheets that there is no profits for the company. So that is the first point I mentioned here, to give impression about success of business to competitors. Okay. Next is to reduce or avoid payment of income tax. If you show lower profits, then you need not pay heavy income taxes. You can pay lesser amount of income tax. The third one is to purchase shares at lower price in the market. What happens? The some investors, or there are certain group of investors who will purchase the shares of the company when share price is very low. So this will attract those investors. The second scenario is showing more profit than what actually they are. So what happens, sometimes the manager will be told that if the company makes more profit, then you will be paid more commission. That time the manager will try to show all these false profits. So that is the first point. The second point is what? When the high profits is shown in the balance sheet, the share market price also increases. So what happens? Some persons, the investors, when they see that share price is going high, what happens? They will think that the company is doing really well. Okay. Later on, what happens? They will also come forward to invest in company. This is also one of the trick. So this is also such kind of fraud itself. So these are all the objectives of auditing. Hope you have understood about the objective of auditing very well. If you have understood, please put in the comment box that you have understood. At the same time, if you have any doubts, please put all your doubts in the comment box so that I'll try to respond to your doubts as soon as possible. If you have not subscribed to my YouTube channel, please subscribe to my YouTube channel and press the bell icon button, because whenever I post some new lecture videos, you will get the immediate notification of all my new lecture. Thank you for watching the video. I'll come back with the next video. If you have any queries regarding today's session, kindly send your queries to education.mbroadcast@gmail.com.